The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the May 11th magical Monday edition of today's, hour two of the Trader's Edge show. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day. Let's make sure that you and I we do everything we humanly possibly can to have an extraordinary Monday. Of course, the easiest way to do that is to always remember that what's talked about is a dream. Hey, dreams are a beautiful place. They're where we start. Of course, what's envisioned, that's when it starts to get exciting. But what's planned, that becomes possible. But what's scheduled, folks, that is real. And I want to really thank you for scheduling your time with me this morning. I'm honored by your presence here. I'm here to serve you. So feel free to pick up that phone, dial in at 877-927-6648. Of course, internationally, you can also call in at 727-445-1044. Remember, if you've got a question, there's thousands of others that have got that exact same question. So you can start your day with a random act of kindness and call in for them, especially on this magnificent, marvelous, magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow off 7 points, trading at 18,183. S&P is flat at 2116. Composites up 11 at 5,015. Russell 2000 up 6 points at 1241. We got to keep one eye on the Russell, one eye on the composite, and we'll keep a couple of eyes on some other things as well out here. Leading the charge, the upside, it is at Nevro Corp. That's up 23%, up $10 and change. Activist is up $10. That's 3.5%. Netflix up 9. Intercept Pharmaceuticals getting in on the game, up $7. Zillow up $6. You've got Monster Beverage up 5. Tesla's up 5. Cal-Maine Foods is fairly calm this morning. It is up 11%, up $4.68. Toyota Motor Corp to the downside, $4 and change. That's off 3%. Pioneer Natural Resources down 3%. Priceline off 0.25%. Noble Energy off 5%. Etsy down 10%. Tesoro off a couple percent this morning. Shake Shack down 3% as well. So where do we begin our day out here? Hey, as we came into the close of the first hour, we looked at the ES Mini. Let's just go back there real quick. Let's just make sure that the key level for us to be watching is going to be 21.1350. You're trading at 21.1225. If we do see a close above that with any kind of meaning today, 21.1350, then we will see these markets move higher. How much higher? That I don't know, but we'll go take a look and try to get a feel for what's going on there. The key here today is, and I just give you that level for us to be watching. But as we start to kind of gravitate into some other charts that we look at out here, let's go take a look at the summation index. Now, the summation index here, we're taking a look at the New York Stock Exchange on the left-hand side, the one-third panel. In the center, dead smack center, is the NASDAQ Composite. Guess what? Price oscillator, as we speak right now, at 10.0. How about that? It's 10.11. It's not 10.0 anything. But at 10:11 a.m., we can see the price oscillator is above zero. Who's in control of the markets when the price oscillator is above zero? Yep, it is the bulls. So we'll see how that ends the day. On Friday, with that nice wide-ranging bar inside of the Dow, guess what? Price oscillator well above zero. Bulls in control of the market. The wide-ranging bar that we had inside the Dow, markets do not like to end on wide-ranging bars like that. And if that's what we see here today, tomorrow, we'll go see those highs get tested, get taken out at least and form a higher high. Whether or not it continues to move beyond that, that's another thing that we'll take a look at. But at this stage of the game, you still have buyers are in control of the Dow, even though it's not really moving much. It's actually doing what it often does after a nice wide-ranging bar like it had on Friday. If you are bearish, what you do not want to see is the price oscillator inside the NASDAQ Composite close where it's at right now, because that would be back above zero. It would have blown through a descending trend line out there, and then you're back above zero, where it is the buyers that have control. All that price needs to do is close above 5043.62. You're at 5,013 right now, and if you get that, you're going to go test those highs. I don't know if you'll put in a new high above 5119.83, but you'll go test 5053.54 out there. That would be its message. Inside the NYSE, the wider swath of the market out here, its price oscillator at this stage of the game rising, not above the zero line. If it gets above zero, then that says that the highs get tested and or taken out. 11,248.99. New York Stock Exchange has been strong like a bull. Ain't no bull about that. If we take a look at it, just simply coming off of the lows out here, this is back on March the 11th, all the way to the highs out here on February 27th. Price made a 0.382 retracement. Maybe it got down to the 50% if you take a look at the intra-session emotional swings to the downside, but the reality is a 0.382 retracement. That is major strong, even though the markets have just simply gravitated sideways to slightly higher. And don't forget, the composite for the first quarter was up 5%. You know, you would gladly take 3/4 of that inside the composite out there. So even though it's been a very choppy, sideways-ish type market out there, the composite's been doing pretty well. New York Stock Exchange has been doing really well also, at least with regard to any move lower on this most recent retracement out here. That's what's going on inside of it. Not yet in the bullish posture out here. So the New York Stock Exchange is still working up an oversold condition out there. It really needs to get above that zero line, the price oscillator, in order for the markets to zoom, zoom, zoom. If we go take a look at one of the liquidity gauges that you and I like to look at, that is your VIX index. Your VIX index right now trading at 1325. That is below the 50-day exponential moving average line, which looks like that is at 1417. So that's the number to be watching. Huge move lower on Friday, getting back below that 50-day exponential moving average line. So we've got the summation index. We got the VIX index. Of course, one other element that we can look at for liquidity, that's going to be your euro Japanese yen currency pair. This is not giving any kind of signal to us that the markets want to move higher with it at its back, because at the moment it's a slight headwind out here, but it's this. We'll call it our third gauge. We won't call it a primary gauge for making decisions inside of the market. So that's the overview of what's going on. Let's go take a look at what's going on inside of the ETF structures out here. Let's start off by taking a look at the QQQ ETF. What do we know about it? Not much. Actually, we know a ton. We know that price has been trading with inside its TAS market profile since the time period of April 29th. We are now at May 11th out there. That's a handful of sessions. That says that price likely to travel up to the 110.04 area. That is your point of control, maybe up to the top of the rising price channel out there. That is also the top of the TAS box at 111.16. That would also be a test of that April 27th swing point out there. The Qs have not fallen apart at all out here. That rising price channel that you're looking at, I think if I put this on a weekly chart, it might make it a little bit easier for you to see. I believe this is the one that goes back into the 2009 time frame out here. The top of that price channel, even though it is a bit of resistance, that line is so easy to move because it's been moved ever since the probably the time period of about February in 2011. You just kind of keep moving it. So it's what we'll call, it's just an aggravation resistance level. It's not like price hits that and you should expect a huge turn back. You just really shouldn't expect that to occur out here. Is that top of that? The bottom, a whole different story, but the top of that rising price channel, it's just there for comfort level as we speak right now, not of any other significant consequence, at least in Steve-O's opinion out there. Let's go take a look at the IWM. This is one that you and I want to keep one of our eyes on. Why? Because we know the IWM, which is the weakest of the four, could not do what? It could not bust them down. And when you cannot bust them down, you know the expression. Tom is the one who coined it. If you can't bust them down, it'll try to go bust them out. How? I don't know. Why? I don't know. What we do know is that's what it does. In the case of the IWM, the Russell 2000, its swing point was March the 10th at 32 million shares. The final test, because it was tested with volume, it was tested with volume on April 30th. It was tested with volume on May 5th. It was tested with volume on May 6th. And then light volume on that test on May 7th. So it should have been able to bust them down. It wanted to bust them down. But guess what? It couldn't. It failed. It flamed out. It was a failure of colossal proportions out there. You can't bust them down. Maybe it goes ahead and tries to bust them to the upside, or at least gradually move higher. We'll know that if we can see a close today. Let's call it a close above 123.63. Any close above 123.63, price will very likely head to 125.66 out there. That is what's going on inside of the IWM. If we go take a look at what's going on inside the SPYs out here, the SPY, that is trading out at 211.66. She's trading inside the swing point from February 25th. That swing has got, what, 73 million shares out there. That was tested on Friday, moved into on Friday with one double nickels, 155 million shares. That's moving into a swing point with volume. Even if we take a look at the resistance of the the April 27th level that had 79 million. You're moving into a swing point with volume. That says you go test 212.24 to what else? 212. What did I say? 212.48 to 212.24 would be the likely area where we would see a test inside the SPY. Let's go take a look at the Dow Diamonds. The Dow Diamonds up 181.70, up 180. They're trading at 181.75. They're down 10 cents. There's a million shares inside the move. What did the Dow Diamonds do on Friday? Well, got inside the March 2nd swing point. That's got 3.2 million shares. Got into it with what? A wide-ranging bar, accelerating price, accelerating volume, 5.5 million shares, PDG, pretty darn good chance that you're going to go see a test of that high at 182.68. We do not, as of 10:19 a.m., have anything that is falling apart inside of the markets. Well, I don't know. That's not true if you are an owner of Shake Shack, and you probably are feeling like you got a really queasy stomach out there. Is it Shake Shack? Yeah, no, maybe. How about Etsy? How about if you're a holder of Etsy? It was Etsy out there. That'll make you have a queasy stomach. We'll be right back, folks. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 20. The S&P is flat right now. So as we try to get a feel for what's going on inside the market, a little conversation going on earlier. I think, one of the time frames. So we're in a market that is trading basically sideways-ish is best that I can call it. If we take a look at the quarterly charts out there, the feeling is that we really haven't moved a whole heck of a lot since January, and there is definitely truth to that. But since then, we've moved up and down quite a bit out here. So that make the point is that you got to find the time frames which shift. Just like any pattern out there, it's just like looking at the weather. You've got several days where you have, nice skies out there, and then the weather pattern changes. Guess what? The weather pattern inside of the stock market is by looking at different time frames out there. And when you start to see something shift, then you want to go ahead and find out, try to find something that correlates to the different patterns that you like to trade out there. For back in the, just as an example, back in the February time frame, I believe it was it February? I'm sorry, it was the March time frame. It was March. Back in the March time frame, the 120-minute charts for the S&P futures and NASDAQ futures were things of beauty, at least with regard to the types of patterns that Stevie trades. I like the A to B equals CD pattern. I love the A to B equals CD pattern. I'm madly in love with it. You should be as well. I love the price relative strength divergent pattern out there. I'm madly in love with that. I am also madly in love with the seventh wave stretch candles out there. I mean, I like those the best especially when they happen with other patterns that are coinciding. The reason is because it makes your risk reward a little different dynamic than what I normally do out there. So and the risk is the only thing that you can control out there. And so that's really, that's where you begin your trade, is taking a look at what do I have to risk and what is it that I have to gain. Now inside the 120, so then it shifted over to the 30-minute charts. And the 30-minute charts were working like a thing of beauty. And when I mean beauty out there, I mean as far as showing those types of patterns out here. Just as an example, here's the 30-minute chart for the ES Mini out here. I haven't updated this in a while, but take a look at these patterns out here. Take a look at these moves down here. This is back in April 14th or so. Makes that nice little price relative strength Stevie divergent pattern. Makes a seventh wave up to the top out here with that price relative strength divergent pattern. Makes in this case here only a sixth out of seventh. I thought it was a seventh wave. I'm gonna have to go back and take a look at the numbering sequence out there. Back here in around May 17th, makes a top out here, 7th wave on the way up on was it April 21st, come all the way down here on April 22nd. I mean, it truly was, and then things started to really narrow down. Never was able to, in its octaves, get into that 7th wave out there. So things started to shift a bit. When things start to shift a bit, then you start to say, okay, so what's the time frame I need to shift to figure out what the market is doing out there? Well, that's where the 120-minute time frame chart, which we're going to right now, and I put that back up on the screen, really worked its magic last week out here. And it worked its magic by being able to get down to the bottom of a descending price channel, a 1-to-1 A to B equals CD pattern, a price relative strength divergent pattern, and a 7th inning stretch. I mean, come on now. When you're a pattern recognition specialist, master, it's about as textbook. How do you not take a picture of this to include in your next workshop and webinar out there, which is certainly what I did. And how do you not use this for trading out here, at least to understand what's going on inside of the markets? Well, the way you don't use it for trading is you have a different picture. Where's things going to bounce to? Well, in this case here, with regard to the NASDAQ, 2-hour chart out here, things bounced all the way up to the top of that descending price channel. So that was always the target on here. That's where we're trading at right about now. The 44.63 level is a key level of resistance. That's courtesy of our TAS market profiles out there. So, that's also on the charts out here. So even as price was moving down in that 7th inning, price relative strength, A to B equals CD, price projection, we also saw price get above the portion of support of its TAS profile. So all of the different tools that we show here at TFNN. Now, prices run into resistance out here, and it's made what looks to me like probably a 5th wave to the upside out here. Now you don't have to have you rarely do you get as many patterns that come together as occurred here last week at about 6 o'clock in the morning. That was back on May the 7th out here. But nonetheless, if we see a break above and a close above 44.63 out here, I'm not saying that's what we're going to see. I'm saying 44.39 acts as a pretty good level of support. Might take a look at this 120-minute chart, and if that level fails, then guess what? Then that's a message that this market could go ahead and pull back lower. But until that time, we'll take a look at that in another minute when we get back from this breakout here.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 52 right now. S&P's off 5. Composites off about 4.5. Russell is up a couple of points. So back to the NQ, back to the 2-hour chart out here. So we know we've got resistance at the top of that descending price channel out here. So that's a beautiful pattern. We know we've got our TAS market profiles out here. Top of the box around 44.62. Bottom of the box right around 44.39. They're also set up here. These market profiles are set up from a bullish bias at this stage. So what we know is this. If we see a close below 44.39 inside the NQ on a 2-hour chart. This 2-hour chart here doesn't end until 12 noon. Then that says we see some type of larger pullback. I mean, we are right up against resistance. Not we, but its chart is really right up against resistance. If we take a look at all these multiple time frames, 30 in the upper left, 60 in the center top, lower or upper right, the 120-minute time frame, what we just looked at here. And that's a chart time frame that I suggest is giving us the best signals out here. But we can also see at that 44.39 level, there is what is perceived to be pretty good value between 44.36 and 44.39 out here. If we do see a break of that area, then we just start to take a look at the retracements as one level. And retracement number 1 inside of the NQ, using that 120-minute time frame chart out here, retracement number 1 says 44.14, and 43.82 becomes retracement number 2 level out there. Let's go to Mary in Boston. Mary, thanks for calling. Thanks for holding. How are you this morning?
Oh, very good, Steve. Great. Thank you. I just have a question regarding ProShares Ultra Short 20-year Treasury bill.
Yes.
And,
okay.
The symbol is the TBT. I was wondering, what your opinion was. Do you think it's going to go up if interest rates are going to go up as well?
So you want to go? So you're looking to go short the treasuries, the 20-year plus treasuries out there,
right,
using the
exactly.
TBT as that ETF.
Yeah.
And you're not in a position right now. Is that correct?
No, I'm not. And then there's also the direction TMV, which is the directional shares of the whole of the same thing, except it's much cheaper, and your reward would be 3 times as good.
It is, and what you want to see with that 300% ETF versus the TBTs. Now, is the TBT, is that a 200% or just a 1-to-1 move? Do you know?
It's ProShares, so I think that's 2.
You think it's 2? Okay.
ProShares Ultra Short.
Okay. So what in the 300%.
You often hear Tom talk about the TLT, which is the.
That's just the 100%.
Long. That would be the long. So
right.
Now, if interest rates, who knows what they're going to do, but this has been moving up over the past month.
It has, and so inside the 300% ETF, that's what you want to see. Is you want to see a trend versus a sideways move out there.
Right.
So in order to make your decision, first of all, with regard to which one it is you want to trade, in a trending market, you're going to outperform inside of that ETF. If it starts to trade sideways, which it could for the time being, then what you're looking at is then you're going to get chopped up inside of that 300%. Now, are you trying to take a longer-term position, or what's your time frame horizon, Mary, that you're looking at?
I would say a long term, at least a year.
Okay.
But I'm willing to get in or out whenever I think it's.
Right. So if we're going to take a look at long term, so here, let me just do this. I'm going to put up a chart on the screen, and it is the 30-year Treasury. I think I've got this. So are you watching this on Tiger TV?
Yes, I am. Mm-hmm.
Okay. So one of the things that we're seeing inside of the 30-year Treasury here, let's see if it'll pop up on my screen. I'm going to go to the continuous contract.
Okay.
And don't pay attention to the gap out here. But one of the things inside the 30-year Treasury here is it got to the extreme oversold condition. And that's just using, are you using some charting applications and any indicators?
I am, yes. Mm-hmm.
If you're trading bonds, one of the coolest indicators out here is just using the typical stochastic. And it is let me just find it out here, make sure my settings. I'm just using the standard 14.3.3. Maybe those aren't the standard settings, but use 14.3.3. The reason that you want to use that when you take a look at the bonds is because it has this fairly cool pattern of being able to identify when it makes significant tops and bottoms out here.
Right. Uh-huh.
And what it does, you'll see price in the way of the 30-year Treasury trades. You'll see price move either up or horizontal, or maybe even down while that price oscillator is moving up, like it did back in June of 2014. It set up and it was communicating to you that it wanted to move higher out there. Mm-hmm. Likewise, as price was moving higher into the August time frame in 2014, that stochastic oscillator was making lower highs out here, and then it went ahead and gave way. And then as it started moving lower, price started moving lower out here, we saw that price oscillator start to get sideways. Now, the reason why I bring that up is because if you trade bonds, this is a really valuable tool for you to have to understand what the message of the markets is. Mm-hmm. Now, as bonds over the past have gotten down into this reading of about 3.5 to 4 or so in that oscillator, we have seen where the market has formed some fairly significant bottoms out here. And that would say that the 30-year Treasury could be poised to move higher. Now, it's pulling back as we speak this morning, and we've seen that just.
I thought the TBT was going up this morning.
The TBT is going up, so I'm actually looking at the underlying instrument for you. I'm looking at the actual. Now I'm looking at the continuous contract for the bond, just simply because it shows that pattern more so than when I go ahead and I put the actual current contract up here, which I've got right now. So it's just simply an aid to be able to say that, look, if you're going to trade the TBT, TLT, TMV out there, you really should also be focused on what's going on in the underlying instrument. If you're going to trade like gold, GLD or something, I would say you really need to make sure that you've got access to what's going on inside the gold contract, because you're going to get your better message from the underlying instrument, in my opinion. So even though it looks like we had a little key reversal session out here as that bottom was formed on May 7th. Now this is the current contract. This is for the 30-year Treasury. Now, if we go to the TBT out here, and we take a look at the TBT on a weekly basis, if you're asking where's the best place to get in, you're looking for a longer-term shot, the price point that I would give you would be 43.47. You're trading at 48.05, so that's a decent move to the downside out here. So that would be a decent. I'm sorry.
That's good that it's going to pull back,
I can't get. Mary, I'm not that good to control whether it's going to pull back or not. but what I can do is give you, from an intermediate term time frame, where a good entry point on TBT would be. On the daily chart, if we were using the daily chart, it would say 45.73 might be a place. So the question would be, and the reason why I asked you the question, what's your time frame on it? It would be, are you trying to build a position? Kind of like that Build-A-Bear store.
I don't know.
You don't know.
I think it just one has to wait and see if interest rates are going to go up. I mean, they may not go up. Who knows? But
I think they're going to go up. The question is, are they going to continue to go up? At least with regard to the Federal Reserve.
I think.
Excuse me.
You think they're going to just go up temporarily, or will they form a trend just like they did when they were coming down? And maybe they might constantly go up too.
Well, I pose this to you, Mary. When we take a look at our Federal Reserve, what it does, and what other Federal Reserves are doing across the other central banks are doing across the world, our interest rates actually have been going up. And they've been going up because of the QEs and interest rates going down across the world out there. So so our interest rates in effect have been going up, and because our interest rates, even if they've stayed the same, they've gone up. And it's been one of the driving forces as to what has actually pushed bonds up, right? People have been saying, hey, I'd rather own a U.S. Treasury than it would own, a bond in Germany or someplace other than Greece as an example.
Right, exactly.
So, So I think that it's been pretty well broadcast to both you and I that rates are going to go up. How far are they going to go up? I don't know.
Yeah, that's the thing. I mean, they may not go up too far, just in case the economy might get disrupted somehow.
Well, the way the economy, the economy is going to be different than the stock market, right? Two different things out there. The way the stock market is going to respond is you're going to see an initial sell-off. That is going to be a buy the bottom. So when that does happen, and quite frankly, I hope it happens like towards September, October, right? Not this June cycle out here, but it could be June. But it is the way the markets will overreact. And the markets will overreact, and they'll believe that they're going to start to fall apart. It's probably these small caps that will get hit the worst out there, the Russell 2000, because they really don't like higher interest rates. Those are small businesses, medium-sized businesses, so to speak, and they're the ones that are going to get damaged the most. But the reality is, if you go back and you actually look at the correlation between when interest rates rise and what happens in the market, you will find out that after the initial, scary move out there, it actually provided a buying opportunity. And I expect that is what's going to happen this time around as well out there. But with regard to the TBT, you're kind of in the middle of it. The TBT is up against resistance. It's trading into its most recent swing point from May 6th. It could take that out. And if it does take that level out, you could have a large A to B equals CD to the upside. But from a trading standpoint, I think 45.73 is the number on a daily chart, and the weekly chart is much further down out there. And those would be your ideal entry points if you're going to go trade that TBT. But I would suggest that you always look at the underlying instruments out there to get a better feel for patterns that are in place. Okay?
Okay, well, thank you very much, Steve. I appreciate it. I enjoy listening to you every morning.
Well, thank you very much. We enjoy you listening, so thanks for doing that.
Great job.
Thank you very much. Have a great day. Yep, that was Mary in the Boston area. So that was a TBT. Take a look at it, multiple different time frames out there. All right, so if we go back to during that time period that Mary and I were having that wonderful conversation, we saw that the NQ, we put that back up on the screen. At this stage here, it's held that support level. Again, I think the 120-minute time frame, so for those of you, playing the game at home and watching, what I do is I look for those, because of the market that we're in, on a continuous basis, sort of continuous, I'm looking for those time frames where we get the best pattern setups from an intraday standpoint, because those are, because of the type of market that we've been in, we have something for the bulls 1-2 days, we have something for the bears 1-2 days. Both of them get all giddy, and I don't want you to get giddy out here. This is not a giddy market. This is not a giddy market to the upside, nor is it a giddy market to the downside. It hasn't proven that to you and I. It can't become a giddy market market to the downside, quite frankly, until you see the NQ break below 42.70. You're at 44.62 right now. That's, a couple hundred points to the downside out here. You break 42.70, and then the bears can get giddy to the downside, but otherwise just consolidation. It's just chop. And so from a trading perspective, you want to try to find some time frames that are working for you, even though we're in this time period that's referred to as the unfavorable seasonal cycle out there. But you really got to know what the heck that means out there, and they're not going to really tell you on television what that means. They just like the rhyme, sell in May, go away, and then they say that for the first few days, and then they forget about the sell in May, go away, because it really isn't about selling in May necessarily and then going away. In any event out here, what we did see inside of the NQ was it held support. But if it breaks through that level, it says there's a more serious move to the downside in order. And that's when we start taking a look at those retracement levels, probably 43.70 if you break through the 44.39-ish area out there inside the markets. Now, let's go back and take a look at, so we looked at the ETF structures out here. The IWM is the one that's actually screaming more to both you and I. It's fighting. It's just saying, I don't want to go down. I've already tested the downside. Why can't you guys get your act together out here? And when it comes to acts getting together, the Dow got its act together on Friday, big time. And the composite is really trying to get itself together right now today. Now, if the composite price oscillator deflects itself right here at the zero line at the end of the day out there, I have to really see what goes on QY, the Qs, volume-wise, things of that sort. I think the more meaning comes from if it actually closes above that zero line. Then what we're likely to see out here is an actual move all the way back up to its highs out there. And I know that, and anyway, that's the meaning. That's the meaning that Stevie sees as we speak right now. If we go look at some things moving to the downside right now, you got Priceline, that's off $11. Really not that big of a deal. It's down 1%. Priceline here was unable to bust through its swing point from February 23rd that had 4.6 million shares. That was tested with 5.4 million shares. That says that the price should have tested that area again, which it did here this morning. Priceline, what does Priceline want to do? That's the weekly chart we're looking at. What the heck am I talking about? So last week it tested that area. Last week it tested that area with volume. That swing point. Let's go see on the daily basis. The daily basis, it actually had the B point was February 26th. Volume was 935,000 shares. Now it's tested with 571. So it did not have the volume when it got above that area. So now we're just really in a consolidation. So Priceline is nothing more than a consolidating pattern between 1129 and 1264 out there for those of you that are trading. Ticker symbol PCLN. Dow's off 28, S&P is down 2, Composite's up a point, Russell's up 3. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 23. S&P is down a point. Composite is flat out there. Boy, do we have smart traders. I got an email as a follow-up to Mary's question, and this person wrote in, and they said, okay, so what would it take for you to get long the 30-year Treasury, going long the TLT? That's the beautiful thing. We got a trader's market out here. You've got to have a buyer and you have to have a seller. The answer to that question would be I would go back to that same 30-year chart. Now I'm going back into the continuous contract just to show you the patterns that are out there, just so that it's relevant. When we take a look at that price oscillator in it, the low that it made back here on which is May 5th, May 6th, the time frame, which said that the market was oversold. That's all that we've seen so far is an oversold bounce. What you would want to see in order to try to take a long position inside the Treasury is you'd like to see price move lower. You'd actually like to see that low here from May 7th get taken out and then do it with a rising bottoms price oscillator, or at least a horizontal price oscillator. You want to see price moving lower, just as it did back here in February of 2015, and then you want to see that price oscillator, in essence, moving sideways, preferably like it did back in 2014, where it was just simply making higher lows out there. That's what you would want in order to see that pattern. Otherwise, I believe that Mary would be on the better side of the trade, and that'd be looking for some type of retracement or some type of large bounce inside of bonds to be able to sell into, and that's where the pullback inside the TBT, that's what would happen with those numbers that I gave you. No, I can't show it on this chart. I pay attention to the commitment of traders data each weekend. And that is taking a look at what the large commercial traders, they are presumed to be the smart money, and the reality is they are the big money, that's for sure. So I'm going to call that the smart money at this stage. And I take a look at what their data is, what they are doing as of the prior Tuesday. So it's released. You can do this yourself. It's released at 3:30 every Friday, holidays, excluding holiday issues that you have out there. And you can go take, now it's a ton of data. You really have to sift through it to understand how to best use it and then apply it to a chart. I have found that it's best to take a look at their, say they categorize 3 types of traders. I look at 2 of those 3. I mostly look at 1, which is what the large commercial traders are doing. But every now and then you can look at the group called the non-reportables. That's guys like me and you gals like you out there that might be trading those futures contracts. So they just categorize us as non-reportable. The large commercial traders, I can tell you that 3 weeks ago, this is what I can tell you. So you can take a look at the chart out here. As prices were moving higher inside the 30-year Treasury and the oscillator was making a lower high, and that was 3 weeks ago, guess what the commercial traders were doing 3 weeks ago? They had gotten to the highest net short position in the T-bond futures that they had in 3 years' time. I just take a look at the numbers, do a quick sort, and see exactly where we're at. What I can tell you is that since that time period, they've stepped off of that short gas, the pedal out here. They're actually down to a neutral position as of last Tuesday. They're not that long or less net short out there. They're more at a neutral position. So them being in a neutral position is why I also suggested that, Mary, hey, wait to see if futures, if treasuries can bounce out there, because in fact it is the other side of the trade is the non-reportables. They're actually at one of their highest net long positions in a long time. Usually that group is on the wrong side of the trade out there. So it does say that the thing to be looking for is a short. It's just the big money the big money is saying maybe just not just yet out there. Hey, folks, it is Marvelous Monday. Of course, that means we've got the marvelous lineup for you. We got the magnificent Basil Chapman. He's going to be up next. Then we have the magnetic Larry Pesavento. Then we have His Majesty David White. And then, of course, really His Majesty ought to be Tom O'Brien, right? We got the king. We got the king of TFNN. So David will have to be. And he'll be magnificent number 1. Tom will be magnificent number 2, because I'm out of time. We'll be right back. All right, folks, have a great day. See you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.